Hi there, welcome to kneppyinvests. The international markets on June the 18th were down big. In fact, I did see markets down 1, 2%. Some markets was down by over 2%. You might be saying, how is this relevant for the theme of my video today, which is all about companies who are seeing their sentiment shift from negative to positive. And when I see sentiment shift in a company, particularly a company I like, I will follow that company much more closely because that's when you want to start buying into the company. Because when a sentiment of a company turns positive, that means the share price could go on a long-term bull run. So I'm keeping a close eye on the ASX today and these companies' share price. Because the international markets were down big on June 18th, more than likely we'll see the ASX down big on open this morning. In fact, all signs point to the markets down between 1 and 2%. Doesn't mean the markets will close at the end of trading today by 1 or 2%. If international futures are up or in the green, we might see a bit of a rally during the afternoon. So I'll be keeping a close eye on the 5 companies I'll be featuring in this video. If these 5 companies actually go up today when the overall market goes down, that really confirms that the sentiment in these companies is shifting. However, if we do see some of these companies' share price fall by 5, 10%, that would tell me that this shift in sentiment is a false breakout. So before I talk about these 5 companies I'll be featuring in today's video, just going to show you what I look at every day before the market opens. The first thing I usually do every morning when I wake up is just to see what happened on the overseas markets overnight, particularly the United States. Because today is Monday in Australia, that means there was no markets open overnight, so I didn't have to do that. The other thing I usually do before trading begins is I see what's happening with the futures for Australia, and the futures, understandably so, are down quite big this morning simply because what happened overseas markets on Friday. So on the left-hand side is straight from the ASX website. That's telling us that the futures are down by 111 points or 1.5%. You can go straight to CommSec and they'll tell you the futures down 111 points. Again, that's taken straight from the ASX website. Or you could just go to Sydney Morning Herald or The Age, go to the business section, and there's a little snippet there. SPI futures were down 1.5% and point to a sharp fall for the ASX this morning. So that's what I do usually when I wake up, just to see what the overall sentiment in the market is for today's trading. The 5 companies I'll be talking about in today's video are either companies I've owned in the past, Appen and Bigtincan, and looking to take another position in the future, or already own in my long-term portfolio, A2 Milk, Kogan and Zip, and looking to trade those companies in my momentum and sentiment portfolio. There's another company I'm not featuring in this, but they have released an announcement on June the 21st that looks quite bullish, and that company is Integrated Research, IRI. That's another company that's been in a long-term downtrend, and possibly the announcement they've released today could be the breakout in the share price and a shift in the sentiment. Won't talk about that company today, but I might do a video for that company in the future. First company we're talking about today is Bigtincan. This is a company I've held about 3 or 4 times in the past. I was disappointed in their Appendix 4C, I think it was in October of 2020. That's one of the reasons I decided to sell out. And from then, when the share price, or just before then, share price got to a high of about $1.60 or so and has been falling ever since. You can see it has been quite volatile, the share price, during that time period. When they released their Appendix 4C on April the 30th, the share price went down 13% and went to a low of about 80 cents about a week later. But we have seen the share price rally since that low of 80 cents in the beginning of May, and it reached a point of support around $1.06 or 7 cents. And then on June 17, they announced an acquisition and a trading update. Share price went through that resistance level that became support. So it went up 10%, and that looks like that could be the breakout in Bigtincan's share price. We did see it rally the next trading day on June the 18th, Very important to see what happens with the share price today on June the 21st. If we do see some more bullishness today when the overall market is down, that could be a good point to buy into this company. So the market is becoming a little bit more excited about this company than has shown in the past. And it does look like this downtrend we've seen since October last year has maybe come to an end. Appen is another company I've held in the past and then sold simply because the shift in sentiment from positive, and we did see share price rise to a high of $44 or so just before they released their half-year results. But from that high of $44, we've seen the share price capitulate and fall from that high to a low of around $11, which was reached in the middle of May. A few negative news announcements from the companies helped drive that share price down. The first bit of negative news was their half-year results in August on the 28th. Saw the share price down 10%. That was the first sell signal. The second sell signal was in December. They released a trading update on the 10th of December. Share price went down 12%. That really helped develop a long-term, or we'll say medium-term downtrend in Appen's share price. Share price kept on falling. You would have had some investors out there say, well, share price is significantly lower than it was a few months earlier, so now is a good time to buy. But whenever you see the share price in a downtrend like we see here, just wait for a shift in sentiment. They released their full-year results on the 24th of February. Share price fell 12% on that day. And then on the 6th of May, we saw some interesting trading because there was no news released by the company. And I believe that could have been capitulation. Share price went down 21% on that day. And a few weeks later, we saw the low in the share price at $11. And just after that low, we saw the company release a trading update on the 19th of May. And this was a positive trading update. Share price rose 17%. This was the first good news the company has released for quite a while. We've actually seen the share price go sideways, consolidate. And the other very important thing we've seen recently is that the 10-day moving average has crossed over the 20-day moving average. That is the first sign of a possible shift in sentiment in a company's share price. What I'll be waiting for here is now the sideways or possible sideways play or movement in the share price. And for those two shorter term moving averages, the 10 and 20-day moving average, to go above the longer term moving average, which is a 51. And that 50-day moving average has remained above the other two moving averages and the share price ever since November last year. So that's about 8 or so months. And when we see the share price move above that, and the other two moving averages move above that, that is telling us that there is some positive sentiment in the share price. And I'll be waiting for that before I take a position. That could be soon, or it could be a few months down the road. The last three companies I want to talk about are companies I own in my long-term portfolio. So unless the long-term story changes, I won't be selling out of these companies anytime soon. However, I am looking at taking some trading positions in this company or these companies based off their sentiment or momentum. And Kogan is very similar to the Appen setup, so I'll talk about that later. However, this chart goes back to November 10, when Kogan didn't release it. Pfizer released their COVID-19 drug results. The world got excited about the release of these drug results, except companies who benefited from COVID-19, like Kogan. So Kogan's share price went down 17% on this news. We did see a bit of a rally in the share price of Kogan in late last year and early this year. However, on January 29, when they released the business update, the share price went down 8.5%. That was a definite sell signal because from that time we have seen the share price under pressure. It has fallen quite a bit from that time, so that's around $18 to $20, and it went to a low of around or just below $9 in the middle of May. Before that, on April the 23rd, they released a business update. Share price went down 14%. That was sort of confirmation of this downtrend, that the business wasn't quite performing to market expectations. Then they decided to release another business update 1 month later. Again, the market initially hated that announcement. Share price went down 14.3%. However, we saw a really interesting thing the next trading day on May the 24th. The share price rallied by 14.7%. That was actually quite interesting. So it seems like the market read the announcement on May the 21st and hated it. Then it digested the announcement during the weekend and came back on the May the 24th and said, it wasn't as bad as we really initially thought. So we're going to buy back into Kogan. The share price then just went sideways, consolidated between $10 and $10.50. That's very healthy. It shows up there's no more sellers in the market for Kogan. And then about a week ago, we did see the share price start to rise very slowly, and the 10-day moving average went above the 20-day moving average. A bit of a crossover, the first sign or real sign of a shift in sentiment. The other thing is the share price is moving towards $11.50, which is the high we saw just before the release of the May 21st business update. If the share price can get above $11.50 soon or in the next month or so, that would be a bullish move with Kogan. So we are seeing signs of a shift in sentiment with Kogan. So I'm keeping a close eye on this. If we do see the share price and the other two moving averages move above the 50-day moving average, that would be a good sign that this shift in sentiment is real for Kogan. Zip, again, is another company I own in my long-term portfolio, but this is a company I've traded in the past successfully and unsuccessfully. It's quite a popular company among retail investors on the ASX. One of the most popular companies, in fact. It's also a very popular company among traders. On January the 21st, when the company released a trading update, the share price went up 23% on that day, and then the next few days it went sideways. That was a breakout in the share price, and we saw the share price just go exponentially up from there. In fact, it went to a high of $14 a few weeks later, and then the share price collapsed. The next trading update on the 13th of April looked like that could have been breaking out as well. But I think a lot of those investors who bought above about $10 saw the opportunity to get out or sell out on the news of this trading update. And that's why that breakout on the 13th of April failed. And then we saw the share price drop all the way down to $6.50. Then on June the 18th, the share price went up something like 9% on that day. On no news, there was just a bit of hype in the tech stock area for some reason. I'm not sure why. And that was a potential breakout in the share price. Personally, I prefer to see a breakout in the share price coincide with some positive news, like we saw with Zip on the 21st of January, when the share price went up 23% on the trading update. That's a more sustainable potential breakout. So what I'll be doing with Zip is just keeping a close eye on the share price over the next week to see if the share price can consolidate around $8 or move towards $8.50. If we do see that trading pattern, there is potential this could be a sustainable breakout in the share price. Anyone who's followed my videos for a while will know that I am a long-term shareholder of A2 Milk. And even though I've been frustrated with the management of this company over the past year or so, I still haven't sold out of my long-term holdings. I could have sold at $20 and made a 10-bagger, but even though the share price got down to a low of $6, that was still a 3-bagger for me. So I'm happy to hold this, particularly because we're potentially seeing a bit of a shift in the sentiment. I'll talk about that in a second. The first sign of trouble of A2 Milk was on their full-year results on August 19. Share price fell 6% on that day, and that was the beginning of their downtrend. That was the first sell signal. The company has released 4 downgrades since then. On September 28, the first one, the share price went down 11%. Second downgrade, December 18, share price fell 24%. Third downgrade on the half-year results, that was downgrade number 3, share price fell 16%. And the most recent downgrade was on May the 10th. Downgrade number 4, share price fell 13%. Fell all the way to around $5 or so, but has sort of rallied over the past month. One thing I've noticed with A2 Milk over the past month is a lot more fund managers are putting buy recommendations for this company. So I think those are value investors who are seeing a bit of value with A2 Milk share price. A lot of these experts are pointing out that there is a new CEO, and a lot of times when you see a new CEO, they can make changes, and usually you don't see many downgrades. 4 downgrades is the most I've seen in a very short period of time. So more than likely, this might be it in terms of downgrades. Particularly the last downgrade was much more pessimistic than what we saw in the past. And that's another good sign. So we're seeing the classic signs of a potential shift in sentiment with the share price over the past week. So to really show you that, I'm just going to show you a zoomed in version of this chart. So I've just zoomed in here to the last about 7 months, and you see a classic downtrend with the share price of A2 Milk. Again, what I've got here is the 50-day, 20-day, and 10-day moving average. Whenever you see the share price and the 20 and 10-day moving average well below the 50-day moving average, the share price is in a well-defined downtrend. No point buying into the company at that point in time until you see a shift in sentiment. However, you'll notice in the past few trading days, the 10-day moving average has just crossed over the 20-day moving average, and the share price has taken off to around $6.25 or so. And this is the first sign of a potential shift in sentiment. This is the first time we've seen that crossover of these two moving averages since August of last year. So there is potential shift in sentiment with the companies right now. And I think one of the reasons behind that is there's a lot of bottom pickers, a lot of value investors getting more interested in this company, and they're driving the share price up because they're starting to buy into the potential of a turnaround play with A2 Milk. So I am potentially going to take a trading position in this company based off this shift in sentiment. Before I complete the video, I just wanted to have a look at what's happening with the overall Australian markets this morning. The futures were hinting we should see the markets down well over 1% towards 1.5%. Had a look at the XGO, and at 10:20 a.m. it is down 1.3%. So going to plan, going to expectations. In fact, when you look at the low for today at the moment, down 7,258. So it's down about 110 points at the low, which is spot on to what the futures was telling us. So that is one of the reasons why I do look at the futures before trading begins, to give me an idea what the overall sentiment is in the markets at that point in time. That is all I have for this video on 5 ASX stocks where there could be a bit of a shift in the sentiment in recent times. I'm keeping a close eye on all these 5 companies, and I might take a trading position if the share price keeps on rallying from here on in. Hope you've enjoyed this video. If you do have any questions or any comments, make sure you leave it in the comment section. I'll answer anything you have to say in the future. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.